We got some massive news for Alphabet stock investors as the results of the case against the company about becoming a monopoly. The antitrust lawsuits worked in its favor. The stock price soared following the announcement of the results of the outcome. And in this video, I'm going to share with you those details and what it could mean for Alphabet stock investors. Of course, I'm happy about the stock price increase. I own Alphabet stock myself. I've owned it since 2020. I've also recommended Alphabet stock as one of the best stocks to buy this year. I made that recommendation starting January. And in fact, in 2024, I had rated Alphabet as the best stock to buy, and the stock performed really well in 2024 as my top stock to buy recommendation. So I'm really happy to see Alphabet shares soaring because I have been a little concerned about why the stock continued to trade at a relatively cheap valuation when measuring on a forward price to earnings basis. It was trading at near the cheapest of its tech peers, and investors were concerned that it was permanently going to trade at that cheap valuation. So I'm happy to see the valuation improving, the stock price increasing. Let me share with you the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Alphabet stock rose over 8% on Wednesday after a federal district court judge ruled late Tuesday that Google wouldn't be forced to sell its Chrome browser after ruling divestment a poor fit in a landmark antitrust case. The ruling from Judge Amit Mehta said the company will have to share data that helped it hold on to its search monopoly, but saw Google avoid the harshest potential remedies. Of course, Alphabet boasts one of the largest market shares in the categories it operates, especially in the Google search business. The company saying, or the judge saying as part of the decision, that Google can continue to make payments to distribution partners for preloading or placement of Google search, Chrome, or generative AI products. This allows Google to continue to make its $20 billion per year payments to Apple in exchange for the iPhone maker using Google Search as the default search engine in the Safari browser and Siri. Apple stock rose almost 3% Wednesday on the back of this news. And this is again another point of evidence where I've been talking about how Google's $20 billion payments to Apple, is it really good for Google? Are they getting a good return on that investment? I don't know. That's a bigger question mark for me. And this is more evidence of that. Alphabet stock price rising by 3% because of this news is another point of evidence that shows maybe that relationship is better for Apple than it is for Google. Apple getting a whopping $20 billion in high margin, that's almost all profit business to preload or make Google the default search engine and make the Alphabet on its iPhone. So interesting developments here. The company certainly generates enough cash flow to make this payment, but it's a large percentage. It's almost 20% of the company's free cash flow, annual cash flow from operations. So that's a big deal to be sure. So now that the share price increased, Alphabet stock is trading closer to the intrinsic value per share I had calculated for the business. Alphabet's current market price is $228. The intrinsic value per share I calculated is $231. Again, reiterating my belief in these intrinsic value per share calculations. When I make these calculations, these are the prices I believe the stocks to be worth as of today. So I expect the valuations, the current market prices, to approach the intrinsic value per share I calculate for these businesses. I see these as a point that gravitates, that pulls the current market price towards the intrinsic value per share. That's the way I view my intrinsic value per share calculations, as a point that the current market prices will gravitate towards over time. And it's interesting to see, and I'm certainly happy to see the current market price of Alphabet rising to approach that intrinsic value per share I calculated. Now, I wouldn't be surprised as I digest this new information and I incorporate how that will impact the company's free cash flow over the next few years if the intrinsic value per share rises as a result of the adjustments I will make to the company's free cash flow estimates. Certainly, the company's risk is now lowered as a result of this ruling. There was a lot of uncertainty surrounding the results of this trial and what it could mean for Alphabet stock investors. A lot of, it could have been good and it could have been bad. There was a lot of uncertainty. You haven't heard me talk a lot about this trial and the outcome because it could have been really bad for Alphabet, but it might have been good if it was forced to sell some of the business segments, and it was forced not to pay Apple. That, I kind of talked about that a little bit. Is it really getting a good return on that $20 billion investment? I don't know. And so if it was forced to stop providing Apple with that $20 billion annually to become the default search engine, would that have been so bad for Alphabet? I don't know. And if it was forced to sell some of its business segments like Google Chrome, it may have been able to recoup so much money for the sale of that asset that it may have still been positive for Alphabet. Of course, depending on the outcome of how much it was able to sell those segments that it was forced to sell. So lots of uncertainty, right? And because there's so much uncertainty, I didn't spend too much time speculating on the impacts of the outcome. But it did take away some of the risks, some of the downside risks of that scenario. And anytime you reduce risk, it makes an investment more attractive for investors because all else being equal, you should prefer lower risk to higher risk. If you're going to have more risk, you want to be compensated for that risk. And so you want to pay a lower price for an investment that comes with higher risk. And now Alphabet comes with a little bit lower risk than it did before this ruling. Of course, there is still risk, and the big risk remains how Alphabet's business will adjust to changing search behavior. People are spending more time on large language models, and that's changing how the Google search business, generates revenue and profits. So that risk still remains. And so now investors will need to adjust to those newer risks, right? So I mentioned I've had Alphabet stock rated as one of the best 7 stocks to buy this year. And I updated that recommendation after the ruling. I still like Alphabet stock at the current market prices, even with the higher price. The stock is trading at a fair value when looking at my DCF. And when I go to fiscal.ai and I look at the forward price to earnings ratio at 21, the stock still looks cheap on a forward PE basis. So with that being said, I still think Alphabet is one of the best 7 stocks to buy right now. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.